The Fraser Valley and Canadian real estate markets are projecting some big drops ahead. In this video, I'm going to go over everything from rates, sale prices, sales volume, and where I think the market's going to go for the remainder of 2024 and even into 2025. Before I get started, if you guys are enjoying my videos, please hit that like and subscribe button to help me get my information out to more people like you. And if you want to book a personal private call with me, you can do so by clicking the link in the description below. We are hearing more and more from reputable sources that the next time the Bank of Canada meets, which is October 23rd, we should expect a higher rate increase than the ones we have been seeing. In the past 3 consecutive meetings, the Bank of Canada has increased the overnight lending rate by 0.25% each time. And unfortunately, that just hasn't given us the spike that we expected to see in terms of buyer confidence in the marketplace. For every 0.25% reduction in the overnight lending rate, that amounts to only $15 savings for every $100,000 you borrow. So for example, if you have $1 million mortgage, you can expect your monthly payments to go down by only $150 per month. It's not really giving people enough incentive to jump back in the market given those numbers. Sure, it's better than it was before when the overnight lending rate was at its peak at 5%. We are now down to an overnight lending rate of 4.25%. But the real kicker is that people know that the bank is planning to continue to reduce rates. So when that happens, you get a whole bunch of buyers that are out there looking, but they're not necessarily ready to write offers and jump into the market. Alternatively, you have people, sellers, that don't want to quite list their home yet because they're not quite sure where they want to buy or what they want to buy. And they certainly don't want to buy too early when rates are higher. For the first time since 2020, the US cut their federal funds target rate by 0.50%. And that was done at their last meeting in September. Generally, Canada tends to follow what the US is doing in terms of their rates. I did find an interesting graph that outlines household debt ratio for Canada versus the US, and you can see there's quite a big difference there. So whether or not the US continues to decrease their rates, which it's expected that they do, but even if they don't, it's pretty important for Canada to keep reducing our overnight lending rate because our household debt service ratio and just the overall cost of living right now in Canada is extremely high, and we're definitely feeling the financial strain of that. Turning our attention towards the Fraser Valley market alone, I'm just going to give you some insight on what we're seeing. So when we look at active listings divided by the number of sales in any given month, we get what's called months of inventory, and that measures the absorption rate of housing. So how fast are things selling? Now, when we compare September 2024 to September 2023, we can see quite a big difference. So the months of inventory as of September 2024 for all property types in the Fraser Valley was 9.3 months. So that means it would take 9.3 months if no new inventory came on the market for everything to completely sell out. Now, I'll remind you that anything over 6 months of inventory is considered a buyer's market. So we are definitely in a major buyer's market, which means the market favors the buyers. They have a lot of choice. You can really negotiate your dates, your price, and the contingencies you have within your contract. Comparing that to 2023, months of inventory was sitting at 5.9. So just in that balanced market category, but pretty well tipping towards that buyer's market category as well. However, fast forward to 1 year later, it's gotten to be a lot more favored towards the buyers. We can see the grand totals year to date. 2024 sales were just over 11,000 units, whereas last year they were over 12,000 units. So we're down 7 1.4%. But what's interesting is when we look at new listings, this year we're at almost 29,000. Last year we were at 24,000. So the number of new listings has increased almost 20% year over year. The gap between sales and new listings is increasing, which again makes total sense why we're heading more towards a buyer's market. Fraser Valley market snapshot here. Detached homes, so we're down on all asset classes in terms of price point. Detached are down 1.5%, and they're taking on average 35 days to sell. Townhomes are down 1.4% month over month. They're taking 30 days to sell, and condos are down only 0.2%, but they are taking the longest to sell at 37 days. Condos are definitely the most challenging type of property to sell right now. I personally have 2 condos on the market, both of which are tenanted. I don't want to get into it, but BC has changed their tenant legislation yet again, and so some of the ruling they've put in has encouraged investors to sell off their investment properties, and it is very, very difficult to sell a rental unit right now for multiple reasons. There's more notice that needs to be given to the tenant now to end the tenancy. It has to be 3 full months notice, and it's also always a challenge to show tenanted properties, but we're not going to get into that today. Townhomes are still consistent, and detaches are also fairly difficult to sell, just given the higher price point that is attached with that type of property. Although if it does have a suite and an income helper, because rentals are so high right now and scarce, if those are priced right and they show well, those are still selling. Now, what is interesting is that despite we've had those 3 rate cuts, we're still leaning towards more of a buyer's market, when generally when you get a rate cut, you get more buyers coming into the market and you start to see more sales happening because buyers can afford more home and they're also looking at lower monthly payments. I think the attributing factor to why that's happening is that we know that rates are going to continue to drop, and so buyers are really being cautious and they really want to make sure that they're getting the best rate possible before they purchase something too early. The flip side of that is that when we do, and if we do get this bigger rate announcement, as the Bank of Canada has indicated, they're saying we could potentially see a 50 basis point decrease at the October meeting. And if that does happen, the market can change quite quickly. It's always impossible to time the market, and I always like to say time in the market beats timing the market. When you're ready to buy and you find that home, I would recommend, and I personally just did this, is getting into a variable mortgage for the time being, knowing that rates are going to fall. Because I'd rather you buy a home today at a lower price, even though the rate could potentially be a bit higher, as opposed to waiting, trying to time it. People jump in and now prices increase. Sure, you might have a little bit of a lower rate. However, you're going to be buying that property at a higher amount. So you have a bigger down payment. Your property transfer tax is also more. So you definitely need to really weigh out the pros and cons. I hope you guys found the information I provided in this video to be helpful. Again, if you want to book a call with me and talk about your specific property in your specific neighborhood, or just real estate in the Fraser Valley in general, you can do so by clicking the link in the description below. And I would really appreciate if you guys hit that like and subscribe button. It does take me time to make these videos, and it helps me get this information out to more people like you. Thanks so much, and I'll talk to you soon.